what is up, dudes and dudettes? This is Due Diligence here, and today we're gonna address some of the stuff we talked about yesterday on stream. In case you missed the stream, and there's some interesting stuff going on. So then I will make like couple of bursts, little small videos, 5 minutes, 6 minutes, 7 minutes. In this video, we want to talk about FUTU, and in the next video, we're gonna talk about some of the stocks that we decided to enter yesterday, and then we're going to talk about, and then in the other video we're going to talk about BOIL, and then in another video we're going to talk about MMAT, and in another video we're going to talk about the general market condition. So today, I guess in this video we're still going to cover a little bit about the general market condition. If you go and look at SPY, you will see that the SPY kind of breaks out a little bit. But the problem with this breakout is, if you look at, if all of these breakout moments are actually happened in the very early on of the market, unless you're Apple, of course, because every time when we see a upward momentum of Apple on Friday, you usually see it like really early on in the morning, and then it goes through a very interesting contraction, and then it goes all the way up and trying to break the upper resistance line, which we put in there about a week and a half ago, and then it didn't. So today it's a very tricky day. Some people call this a temporary bull trap. Some people call this an indication of a bullish sentiment next week because it jumped over the previous resistance line. But you guys have to be really careful right now. Why is that? Because, okay, let's look at the energy price, right? So BOIL, what we love, we exited yesterday. We talked about yesterday it's going to reach about $81. So we all exited on stream, as you guys see. And then today it pulled down to a contraction. And then if you look at the oil price, it's still hitting all-time high. That means next week we can do some BOIL plays, right? That's another video material. But for this week, what we really know is, okay, so the inflation is not going anywhere. Inflation is going as high as possible, and the oil is going as high as possible, which drives lithium price actually going higher. Remember that $10 call option we bought a day ago, yesterday on stream? Yeah. It made like, I don't know, 100% return or something like that. And with this general market condition, that means the uncertainty is really clear, actually. You cannot say the uncertainty is really clear. It just means there's no certainty really in the market. You will see a couple of gap offs and a couple of gap downs depending on how Congress is treating the whole debt ceiling, the whole lifting interest rate, like not lifting interest rate. Well, kind of, because the Fed cannot control the physical policy. The Fed can only control the monetary policy. So sometimes physical policy makers use monetary policy as a guidance. But apparently right now, the House and the Democrats, well, Republican too, they all have their own agenda. They don't really want to go alongside of monetary policy, which means physical policy sometimes acts on the opposite side of monetary policy, which gives monetary policy more of a pressure on the Fed to react to certain economic shocks. Okay, let me unpack that real quick. In layman's word, that just means the economic condition in the next month all the way until November 9th is really volatile, which means, okay, so our upward limit for the SPY, we can go up to back to all-time high, but we're going to go back up to an all-time high in a very unpredictable manner. It can be gap up, gap down, gap up, and then all of a sudden there's some random news coming out and then it goes down again. But we will, at some point over the next few trading days or the next few weeks of trading days, we will hit all-time high. Okay, this is just a prediction, and I think it's going to be true. But the problem is it's really hard for us to really grasp on how much point we can make on the NASDAQ or how much point we can make on the SPY. Unless you're just investing like stuff like Tesla, that's a really kind of consistent, but in reality, Tesla balance sheet is actually not consistent because everybody's avoiding the fact that they actually lost a lawsuit earlier this month, actually. Well, earlier last end of the month, that lost them about a quarter of their entire year's profit. But anyways, today we're going to talk about FUTU, okay? So there are two people going on stream yesterday. I mean, there's only like a couple of people on stream yesterday because I didn't really let you guys know that what is going on. So yesterday around $71, they told us that, hey guys, I think this is a good buying opportunity. And then I told them, I was like, oh, it at least will pull down to 69. But what I didn't tell them is there's a huge stop loss at $69 for this stock. And the trigger for this entire, ridiculous, I don't know, like this is what, $20 pull down now? So 1/4. It's literally like 25% of overall pull down on the stock. And if you pull out your calculator, you'll realize that $20 over 81, see, 25%. 25%, it's ridiculous. And then there's no actual physical or legislative policy that's put in place to make this fear of, Chinese brokerages that does American exchanges, those stocks will go down in a definitive term. Why? Because it all stemmed from an article from a newspaper. So one of the biggest news outlet in China sent out an article and saying, hey guys, there's some data security problems with all these firms who are using Chinese money to invest in the US market. And then all of a sudden everybody panicked because the federal government in China actually sent out a directive and saying, hey guys, I do think this industry needs a reform. So what happens when the federal government send out that kind of directive? People panic. They start selling. And more news outlets started to say, oh my God, it's going to be a huge problem, blah, 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 data security. And then US investors, without knowing what the process is actually at place in China, in order to go from a directive to an actual law, it takes at least a year, okay? And apparently the market reacted way early. So then yesterday it dropped down by at least 15%. And today it dropped down, technically it gapped down a little bit, so about 20%. And then so my actual buying point, I set it at 66.79 and 69.99. Because I thought people was going to come back and then grab a little bit of this very cheap. Because if you can look at the balance sheet, it makes way much money than this, okay? And if the US market keeps going well, this brokerage will actually do well because they still have commission fee. So basically, it reaches at the point where it's like, okay, I'm going to buy some stock options. But the problem with this is, not a lot of people understand this message that I'm trying to send here. And not a lot of people understand what is really going on in the Chinese market. This is why we got some fire sale stuff going on. So this morning at text number 2, I was like, you do realize there's someone that, come onto our stream yesterday and talk about the stock. And I do think the entry point is around $69, $65, and 63. And I think if it reaches, I think if all the stop loss got reaped at 69, it actually will get to 15% loss today. And then we probably should enter a little bit, but I still think today is too early of an entry point. I do think if today we have a 20% loss, tomorrow on Monday, we might even see a $59. So what I did is I immediately pull out my options because I think it's too early of an entry point, and I start buying physical shares. Why would I buy physical shares? Because think about it. If you buy an option, I can use the same amount of money to buy physical shares, and it's just sort of anchoring down as an anchoring position. And then this is very, so if you have a trading plan for this is very simple. We all know that $69 is stop loss, or at least I know that. So you have a stop loss line of over here, right? We know the downside for Monday is $59. That means as long as we build position within this range, and then once its RSI dropped to a single digit, which is most likely to be $55, we can buy options to offset our losses, but also using option to basically recuperate all our losses by holding physical shares, and at the same time having leverage because we're going to buy $60 calls and $70 calls. And when all the media attention eases down in about 15 trading days, or somewhere around 10 trading days, we will see a big pull up. You see my trading plan here? All right. Take a second to process that. Okay. Well, good. I mean, as when we're talking about Chinese stock, we might as well talk about this one too. So BABA, okay. Interesting thing is, it's somehow just lingering around 170. So today there are two plays you can do. Either you buy the $170 call options, which in the Chinese market, the sentiment for Alibaba is they think it's in a downward trend. But most Chinese people are not as intelligent in stock investing. So the actual upside you will see is 175 actually. But the problem with this play is you also have a potential downside. Because on this day, you have a huge amount of retail investors in the US just pumping a lot of shares in Alibaba because they think it's very undervalued. But the problem with this is institutional base is around this point, right? So they have this huge range to play around to play with their profit. So then the problem is your downside actually does not offset your upside actually. If you think about, if you enter Alibaba, your downside is actually huge. It's bigger than your downside is 153, which is my next entry point, by the way. I do think, for those of you who are on stream, so for those of you who are in Discord, for those of you who are in Patreon, you know that I am actually active shorting this. I'm buying puts on this because what I envision this will go is it will go this, and then it will go like this. And then it will go to 153, and then it breaks out, and I will just trade 153's call option. Guess what? I was wrong. But while I'm wrong, what I did is I contracted my option position, and I'm just gonna simply wait. I might in a Monday, I might buy some 170, and then if it breaks out, that's perfect. Then I sell it the same day. If it doesn't, then I'm just gonna slowly wait it until like this entire downward momentum ease down. So right now, the general market condition is if you buy puts, it's actually unprofitable. It's non-profitable unless we have a huge downward momentum on the VIX. Okay, it's not profitable. So what you want to do is you want to time your trades well and start buying call options all the way until November. Because November, we might see a huge pull down. Alright, this is it for the video. Hope you guys love it. See you guys on the upside.